Hello guys, this is David Cross again. Welcome to next session. Today's session will be different from previous ones. I'm not planning to share with you any trade idea or to give you a trade suggestion. Today's target will be to give some guidance to newcomers in Forex, because I think everybody understand that the most difficult thing in Forex to understand how to start it, and when you start all the time you face a lot of problems. And from my experience, most of the time 99% of traders in Forex, after they place a trade or after they lose their funds, they start asking questions. So that's why, in order to help you not to make these mistakes and to be a successful trader, I'm trying to give you a brief guidance in this video. The video will be, I will try to make it in 30-40 minutes, and during this period I will try to give you the maximum information how you can how you can understand Forex in a simple way, and how you can be a successful trader in the future. Let's move on. So first of all, the content we'll discuss basically brief idea of Forex, what's Forex about, how to trade Forex, and of course some types how we predict price. So what's Forex? It's foreign exchange markets where currencies are traded. Currencies need to be exchanged in order to conduct foreign trade and business, and every single change in the currency value can be a profit opportunity. One unique aspect of the international market is that there's no central marketplace for foreign exchange. Rather, currency trading is conducted electronically over the counter, which means that all transactions occur via computer networks between the traders around the world, so rather than on one centralized exchange. So what does it mean? It means actually exchanging the currency is a part of our life. When you travel somewhere, let's say you travel from Europe to a place where you cannot use euro, you need to use a national currency. So what you do, you find an exchange center, you convert your euro to that currency, and of course each currency having a buy or sell value, and the people who live there, if they want to travel euro, they pay their national currency, and of course they get back euro, and the exchange center, by using this difference, which is called spread in Forex trading, they make their money. This is how actually the Forex market, physical Forex trading work. So who trades Forex? This Forex is different, because Forex is a big market and it has a lot of participants, and the foreign exchange or Forex market is the largest financial market actually in the world. It's larger than even the stock market, with a daily volume of 5.1 trillion US dollar. We are 84 billion for equity market, for stocks and indices market. So the major players in this market tend to be financial institutions like commercial banks, central banks, money manager, hedge funds, multinational corporations worldwide, or it can be individuals or retail traders. A very small relative portion of all Forex volume, and mainly use the market to speculate and for daily trading. So here you can see the kind of market structure. What are central banks? Central banks they actually control the monetary policy. In every country there is in every state there is a central bank which controls everything: the interest rate for credits, interest rates for deposits, the money supply, inflation, and so on. The people who actually do the economy, they understand it much more better. Interbank, the banks, for example, US banks, European banks, exchange between each other different currencies, so it's called interbank market. They do it through Reuters or EBS. It's called electronic broking system. Meantime, there are international ECN, electronic communication network. It's a digital system that matches buyers and sellers looking to trade securities, assets in financial markets. We have retail Forex dealers and retail Forex brokers. Actually the number of retail brokers, they're more from every day they're rising. So it's the broker where actually you are planning to trade as an individual trader. They are licensed and regulated brokers which offer you a liquidity provider, market maker for trading. So you can find a retail broker, you can find an ECM broker. What's the difference? The ECM broker, they have their own platform, they don't need a market maker, they just have a liquidity provider which allows you directly trade in the market. So you have commercial companies and hedge funds which are using your funds on your behalf and using different strategies, using leverage, right, to increase it. And we have speculators and individual traders, which I already explained. So trading terminals, major banks, like I said, they are using Reuters terminal or electronic broking system. The individual traders or retail brokers, they use actually MT4, MT5, Xstation, Trade FOREX, and other alternative online trading terminals, which allows you without going outside, by sitting in front of your computer for 5 days during the week, except the weekend, for 24 hours, to be able to find any asset which you feel, and of course to make an investment decision. So how to trade Forex and why we should trade Forex. First of all, what's the difference of online Forex trading from going physically to an exchange and changing the funds? The thing is that, for example, you can go to an exchange center in your country and to buy $1,000 by giving your national currency, and after some time, when you see the price of dollar increased, you can come back, and by converting your $1,000 back to the currency, you'll be able to generate profit. And difference between the buy and that selling price will be your profit. So what's advantage of Forex trading? Why you should trade Forex? The thing is that for buying that $1,000, you don't need to have 1,000, as most of Forex brokers offer leverage trading, which means you need to have 100, 200, 300, 400 times less money than 1,000 to take that contract in online Forex broker. First of all, what you need to do for this, for starting making this profit, you need to find a reputable Forex broker with a regulation license, which can allow you the right to do that. Secondly, you find, of course, your account, you make investment, but make sure that you invest the amount which you can afford yourself to lose. It's very important, because all the time there's a risk in the Forex, and for the beginning I don't recommend to use a higher amounts. Secondly, you need to educate yourself, because you need to understand how you can control the situation, how you can make the analysis, like technical and fundamental, to predict the price movement, because only in that situation you'll be able to place the right trades, of course, to generate profit. After you make all this analysis, what do? If you think the price of an asset will increase, you simply click on buy button, or if you think the price of an asset will decrease, you click on sell button, and this way you place your trade. And once your trade is closed, the difference between open and closed price, if you're successful, will be your profit. So the way is very simple. Now we go to details, how to focus in the market, so how we make this forecast. There are three main models which are widely used to focus the price. The first is purchasing power parity, which can be used from the fair price concept, which means sometimes the assets can be overbought or oversold, allowing the trader simply to buy the highs and to sell the lows to make profit. So what does it mean? For each asset, there is a fair price. If you see the asset drop to historic minimum or reach to historic maximum, which at which level it never was running, it means that definitely the price will reversing, will be starting to change the direction. And what do? You find this kind of assets which are on the top, at the top or on the bottom, and you take reverse trades. So relative economic strength, what does it mean? All the time you prefer to buy the currencies, to take the currencies with strong economy against the currencies with weaker economy. Like you take dollar versus Turkish lira, because Turkey having a strong economic problems, inflation is rising, or you take dollar versus Argentinian peso or a Mexican peso, for instance. So what you do is simply finding the assets with strong economy, taking the assets, taking with the currency with the weaker economy.
econometric models of forecasting exchange rates. So what it is, it's more advanced type of relative economic strengths. It means you add the more data, like interest rate difference of different central banks. For example, one central bank offering high interest rates for a deposit, and second central bank offering lower, and you understand that higher interest rate for deposit, increasing interest for the currency. People tend to buy that currency. That's why it has more buying power, more interest, more demand. So that currency will be stronger against other one, for instance. So about these models will have. I will try to make more videos in the future, a more detailed one, which can give you more detailed information. So we move on. So how to focus on the price. There are two main principles how we do the forecast. The first is technical analysis, and second is fundamental analysis. What's technical analysis? Technical analysis is a tool which looks at the past price movement on the chart to predict the future price actions, while fundamental analysis is a tool which allows a trader to follow up to date market information, political and economic, to formulate future price structure. Let's start with technical analysis. Have a look what technical analysis is, and of course look by details, because there are different parts of technical analysis, and for understanding technical analysis, first of all you need to understand what's Japanese stock charts and so on, which we're planning to talk in the coming few minutes. Briefly. So technical analysis is a trading discipline employed to evaluate investment and identify trading opportunities in the trends and patterns seen on the chart. Technical analysts believe that past trading activity and the price change of security can be a valuable indicator of the security future price movement. So what actually the main principle of technical analysis? It means the market all the time discounts everything, so the price moves in trend. Price includes everything which happens around us in economy and politics, including the price, and history tends to repeat itself. So in general, technical analysis look at the following broad types of indicator, like price. Follow the price, it's losing chart patterns. Later we'll discuss what's chart patterns. Look at volume and momentum indicator. What's volume? Trying simply to take to buy the asset where you have the maximum buy volume, or to sell the asset where there is the maximum sell volume. We are using this one oscillators, moving average, support and resistance level, to do this kind of analysis. In order to give, for instance, so what we will do, we'll for example have a look. What we see now in front of us is called Japanese candlestick charts. So here we have green candles and red candles. So green candle stand for up movement, and red candles stand for downtrend, and each candle represents a certain time frame, and here I selected D. So you can see M1 minute, 5 minutes, D1 1 day. So it means this candle stands for 1 day price action. So we have body of candle, open price, lower body, lower part of body, open price. The upper is close price. We have upper shadow, which means the maximum price. It's the price during the day the market reach maximum, while there is no almost lower. It means the minimum price actually it stands at the stop price for this candle, which represents upper movement. For next candles, red candle upper body is open price, a lower is close price, upper shadow or tail is the maximum. I will try to show you like this from close look. It's upper shadow, or we can find it here. Look at other ones. Yep, we can find it for upper body open price, close price, upper shadow maximum, and the minimum price for that 1 day time frame. So what I want to show you no JPY, just to show you the average concept of technical analysis. For example, we'll look at long time frame, and what we'll be able to see here is that, for example, if you're looking, if we put a line, we can see that an average long time period since 2016, there is a price level which is 114,565. The price repeated this so many times. So it was a price where price all the time was reaching, and after this increase, we can see price reversing back, and it's repeated 1, 2, 3, 4, 5 times. So the price tends to repeat forecast. We move on. So what's candlestick? Candlestick chart are used by a trader to determine possible price movement based on past patterns. Candlestick are useful when trading as they show 4 price points, like we discussed earlier: the open, close, high, and low, through different time periods. But as usually a professional trader, they prefer to use a longer time period, like 2 hours, 4 hours, 1 day, and so on. And mail algorithms are actually based on the same price information shown in candlestick charts. So that's what's very important to understand very well how to manage Japanese candles. So understanding candlestick chart, part 1. So what kind of candlesticks we have? For example, we have long green candles. This candle is having a long body. They have almost no upper or lower shadows, and as soon after this kind of long green body candles appear, it means there will be continuation of upward trend, so it's better to continue buying that asset. Or if you see long red body, it's in opposite, so with red color, which stands for price decline, with almost no shadows, it means the next candle probably will be red, so you can continue selling that asset. There are different types. For example, we have spinning top. These candles are in a stable market, which no particular clues to identify market trends and imbalance between the buys and sells. So when you see in longer time periods, like 2 hours, 4 hours, 1 day, this kind of candles appear, very often it means the market is very flat, and it's better to stay away right before you get full idea what's actually happening, where you catch a trend. So or you can have long upper shadow candlestick. The shadow lines, you can see upper shadow, it's with red body. Above imply a bear market, but only under one condition, which means that they must position themselves after a fairly strong uptrend. If you see for a long time, let's say in daily time frame or 2 or 4 hours time frame, you had an uptrend, and on the top you have like few long upper shadow appearing, it means definitely the price will be turning down, to start dropping, and it's time to sell that asset. So or you can find long lower shadow candlestick. This is a situation which means you have a green body with long lower shadow with almost no upper shadow. So in that situation, as usually it appears after a strong decline in the price, and when you see it appears, it's the first sign that the price can start to reverse and return back, so it can be a good buy opportunity. There are some other types. So we have hammers, inverted hammer and standard hammer. Hammers, they appear, they play the function of bullish chart pattern. Here we made a mistake. It should be inverted hammer and it should be a standard hammer. So they appear right on support levels, and it can be preview at the start of a strong bullish trend, while a shooting star hanging man should appear at resistance levels, and can be can give a signal about the start of a strong downtrend. Bullish engulfing and bearish engulfing candles usually appear between two sessions, when one session closes and second session is starting. As usually you can find this kind of candles combination in daily graphs from Friday, which is the last trading day, to Monday. Time frames. Actually, there are a lot of candle type. We can find the doji candles where open and close price the same, both long upper and lower shadow. It can be also the reversal chop pattern, or you can use also the combination of the patterns. They can be like 20-30 candles. More than 20-30 candles can create a pattern. different patterns. It can be harmonic pattern or other patterns like head and shoulder, which can be a good signal about trading, but we'll talk about this in my next presentations. So what do we do? One of the basic principles for trading is trend analysis. There are three main type of trend. If the price is going up and up consistently and along the time, creating higher highs and higher lows by buyers, for us, we are in the presence of uptrend, and if you see the price going down and down for a long time period, creating lower highs and lower lows by sellers, for us we are in presence of a downtrend. Or sometimes you can see the price is bouncing between two price levels. Yeah, we are in the presence of ranging trend. So, well, about what's uptrend, what's downtrend, I will give you now. So for example, you can look at from trading view, or you can use again even the platform which I'm using. We can go, for example, for 1 day time frame. What we can see, for instance, we can go and add the trend line. For example, when I'm adding a simple trend line for some time, I will be able to see higher highs here and higher lows. So here we have higher highs, the higher points getting higher and the lower points getting higher as well. So we create an uptrend, for instance, while we can see the opposite situation. The previously here, for example, we had, if you're looking, lower lows and lower highs, we create a downtrend movement. Or sometimes the market can turn right to a range position. What's range? It's very simple. For example, for this period of time, which we are looking, this period the price was standing simply at between two range, which means we had a flat market situation. It can be simply sideways details. So now the important thing for technical analysis, for forecasting the price, understanding when the price can stop or whether the trend can continue, it's understanding support and resistance. So what's support and the resistance? Support is the way the price of an asset tends to stop falling, and area of resistance is the way the price tends to stop rising. To use support and resistance effectively, you first need to understand how asset price typically moves, so you can interpret support and resistance from the framework. So you also need to be aware that there are different types of actual support and resistance, such as minor and major strong. Minor levels expect to be broken easily, while strong levels are more likely to hold and cause the price to move in the other direction. For example, from this example, we can see the support. The support is a level which stops the price from dropping. So all the time when the price was trying to reach and cross this level, the price reversed back. So we create a strong support, and after it was increasing, we can see the price simply facing a resistance. It's a level which stops the price from being, to increase. After some time, we can see there is a strong impulse and the level is broken, and then we met another resistance. So all the time resistance levels, they are not forever. After strong impulse, every level can be broken, and after resistance level is broken, it can turn to support. So the price reaching to second resistance, so we make a reversal movement, and the previous resistance level, when the price dropping, playing the function of support and creates another new corridor for price movement. Support and resistance level not all the time is horizontal. Sometimes the trend lines also can play the function of support resistance. So in uptrend, the higher lows, the level which connects the high lows, can be your support. In downtrend, and the level, the line, the vertical line, which simply connects lower highs, it can be your resistance. So what's fundamental analysis? So as a last part of our session, fundamental analysis is a way to analyze the market by using different events, reports. It simply allows to evaluate a country's economic power. For example, if you see a country facing economic decline, definitely the first thing which you do is start selling that asset. Or if you see the country having the potential and you see the economy forecast and offer you a strong increase in the from first look, it looks very complicated, but it's not like that. Every broker, most of brokers actually, normal block, they offer economic calendars which you can use to view actually the events. For example, we can look for next week. We can find different events. Every event can offer you a trade opportunity, because definitely they will bring strong or weak volatility to the market. As an example, for example, we can have a look at one of the assets. We can look at pound USD, or even the same USD JPY. Because after coronavirus pandemic, like other assets, US dollar was dropping the value, so we can consider the fundamental event. Or if you go to pound USD, what it can be interesting for us to look, for example, we can check recent political events, which was very important at the start of the year. It was, for example, so in terms of December, we had election coming, parliament election, and that time you can see the strong green candle, because Conservative Party won in one day by pushing pound over 300 pips against US dollar. Or if you want an neutral website, you can turn to Forex Factory. About economic calendar, we'll have again the webinars in the future and fundamental not. That's why if you like this video, please put like. I will appreciate your feedback, and in case if you have some interesting topics which you would like to discuss, add it in the comments. So based on that, based on the request, I will try to make some new videos for you. Thanks guys, trade safe. I wish you good luck in trading. See you next time.